we've had a good year, as we all know,
Fantastic.
and a really good December until today. What are we seeing going? Clearly,
it feels like a little profit taking.
As of today, Santa has apparently left the building, though. Right?
Not just yet. I mean, as of Friday's close, Santa Rally was up 0.7%. It was about 0.4 earlier. It looks like we give it a little bit back, but it's not about it being a huge rally. It's about after the 7 days are complete. So on the second trading day of January, if we are positive for that 7-day trading period, it'll be a little sigh of relief. The first indicator of a January indicator trifecta. Add in the first 5 days, the January barometer, the full month as January goes, so goes the year. And it's a pretty positive, indication that the year ahead is going to be solid. 30 times we've had positive triple indicators there, the trifecta indicator. 27 years up, 3 down. So,
what's the January effect?
That's small stocks outperforming large cap stocks in the month of January. We've seen that really begin in the last half of December. I'm looking at the Russell 2000, which has, been tracking the seasonal trends a little bit better. We have a few strategies we use to trade that. There's a free lunch strategy, picking bargain stocks, making new lows and triple witching. But basically, small stocks bouncing back last half of December, sometimes rolls into early March.
And it's a year divisible by 2 next year. It's an election year.
It's a presidential election year.
So what typically happens during an election year? Even though the last 4 years have been anything but typical, right?
Well, I mean, more typical than
traditions falling by the wayside, I'm saying.
Some, but I mean, seasonally, we've seen things really fall back into step a little bit, especially this current year. Sitting presidents running for re-election tip the scales a bit in election years. Most election years are on average about 6.7% for the S&P, 5.3% for the Dow. But when a sitting president's running for re-election, you see a gain of about 12.5% for the S&P, 10.1% for the Dow, versus when there's a open field, minus 1.5% loss or 1.6%.
What will the back and forth politics do for volatility?
It'll create some more, probably during that worst 6 months period. We'll see when all the primaries are going on, some sideways action. January has been weaker in election years as well. Even dipping a little negative for the Dow, where here valuations are up, things are overbought. There's that old January break that the pit traders in Chicago always talk about that seems to be materializing a lot these days. I wouldn't be surprised if we had a little bit of a pullback in January.
All right. Jeff Hirsch, good to see you as always at the Trader's Almanac, of which we have a new copy.
Yes, good.
The ink is still, I have ink on my fingers now.
Just be careful with that.
Still wet there.
Jeff.